Hi everybody, it's Robschild. It's Thursday, September 18th, 2025, and we start with our headline: Jobless claims steady and LEI continues to drop. I was under the impression yesterday uh, and last week that the Fed had some kind of insight, knowing that the jobs market was more obviously falling apart at this point. Today's initial jobless claims went straight back down. Just like many other times in the past, when we spike up one week, it's just like kind of an anomaly where we spike back down the next week. And so, from that standpoint, on the initial claims, this is not getting out of control to the upside. I was suspecting with the Fed cutting yesterday, starting the what's assumed to be a cutting cycle month after month, 25 basis points each month, that this was it, and we would have evidence of the jobs market more clearly weakening. And today's initial claims dropped all the way down to 231,000. Again, this is seasonally adjusted, but it came out even lower than the forecast. The forecast was around, I think, 241. Yeah, right here. So 241 was the forecast, and the actual was actually only 231. And then the continued claims, as a commenter wisely pointed out on the last week when I talked about this is a week behind. And this ended up being lower than expected on the same week where that spike happened, actually. And so the continued claims actually dropping. But again, one way to see continuing claims not rising is that people, are perhaps more willing to take a job that they would not normally take, thinking that they had more options, and now they're seeing less options, and so they're taking what they can get until things dry up more. With the job openings dropping, we are definitely going in that direction. But this weekly report is the canary in the coal mine, and the canary is still alive and singing as far as I can tell. So again, it's interesting. We had the first cut in September, and this is not yet falling apart. The thing that says, yeah, the economy is actually falling apart here is the LEI. This came out at 10 a.m. this morning, showing a 0.5% decline in August. And then they upwardly revised July. So, but bigger point here is, again, just to repeat, the LEI fell 2.8% over the 6-month period between February and August, at a faster decline than its 0.9% over the previous 6-month period. So sorry, you can't see that. Like I've been saying in shows, it's accelerating to the downside. Just to go over the chart, the LEI is the blue line. When it goes down, every time this has gone down in the past, the black line eventually follows it. And when the black line's going down, that is the recession. The black line still not falling, actually rising, the coincident index. I want to note, too, that sometimes the LEI is dropping partly because of the stock market falling, and the stock market actually is still contributing positively to the LEI, and everything else under the surface is what's really cracking things down. Imagine if we do get, more bearishness in the stock market to add to all of these other points, we could actually see this blue line accelerate to the downside even more so. Moving on to community topics, what moves, if any, did you make today? Did you buy anything, sell anything? If you caught my post in the middle of the morning, I think, I wrote on a YouTube post that I sold all of my Chinese equities. I will be updating my website. I am out, like I've been saying on the show. I've been uncomfortably holding these because I believe these stocks they're no longer so blatantly, obviously, undervalued compared to everything else. And that's risk that I am just not interested in holding, and I made a ton of money, and so I sold it all. Did you make any moves today? Comment below. Coming up, don't forget about those tariff updates. And next week, we also have PMIs and PCE, Fed favorite inflation gauge. And seeing how nervous Powell was yesterday, I don't know. It'll be scary if this number comes out hotter than what's expected, but that's something to look out for. Thank you for watching, liking, subscribing, commenting, and supporting the channel. No changes to the crystal ball readings. See my website link in the description of my video to read through my daily reminders, current macro reviews, and portfolio explained. I will try to update this evening. I no longer have any Chinese equities. On to the charts, starting with the SPX S&P 500 all-time closing high. And not only that, this orange trend line, for those of us that love trend lines, this dates all the way back to the bottom of October 2023, connecting to August 2024. And then we've been bumping our heads on it recently, and we broke through it, and we did get a confirming candle to the upside. So this is, by that metric, fairly bullish. But this tail on the top is like, yeah, but be careful here still. This isn't like the most bullish looking candle. Another way to look at this is maybe a spinning top or doji pattern, with the two wicks on the top and the bottom. This can serve as a reversal signal. It could be a top. I'm hearing tomorrow is a triple witching day for options, and so the institutions are going to want to bring this market to a neutral standpoint wherever they can, make the most amount of options contracts worthless. And my guess is that we're going to be headed back down to, a moving average, especially after this run up since the beginning of September. Very similar looking candle here on the triple Qs, the NASDAQ, doji or spinning top pattern. Also, the charts that I'm sharing on this show should be a little bit more clear. I changed the colors of it, so things should be clear. I wish TradingView had an option where I could make the wicks a little thicker, but I digress. Next up, Bitcoin did get to my orange line that connects back to 2017 and the 2021 tops. You can check it out yourself. I mentioned yesterday I'm interested in shorting around here, but I'm not. I don't have the guts anymore. As fun as it is to try to take advantage of things collapsing, it's a lot harder to make money that way, generally speaking. I much prefer to find things that are clearly cheap and buy them and just wait for them to go up to get to a reasonable value than, assume that I can figure out how high these darn things can go. I'm hearing voices out there calling for $1 million on Bitcoin now. I have no idea how high this is going to go. So long and short of it, I'm not currently shorting Bitcoin like I suggested yesterday I might. Next up, IWM, the Russell 2000, did hit the double top. I mentioned yesterday, looked like we were reaching up towards the double top. Today, we actually hit it. We pretty much closed right on it. And so it being a double top, this could act as a double top. Double tops are generally bearish. At least, short term, we could easily expect a bit of a pullback here, especially considering the options expiry tomorrow. KWeb, the Chinese internet ETF that I no longer own, I sold it all today because I was thinking like, hey, is this traders better than me were expecting this to get 45.60, and it looked like we were headed straight there. Now that we're pulling back, we could consolidate. I don't know what's going to happen. All I know is that my fair value of this fund is $37.73. We're far above that now, so I'm happy to be out of it myself. No advice. Can this go to $120 a share? I don't know. I have no idea. And I don't care. I'm a value investor. I look for things that seem too obviously too cheap. And I buy them and I try to sell them at more reasonable values. That's how I'm playing this game. You can, just to quickly mention, especially people that haven't, a lot of new people watching my show, one important thing that a lot of intelligent traders talk about is that there are many ways up the mountain. You don't have to be a trendline trader to climb up the mountain. You don't have to be a momentum trader. So there's momentum traders that hate trend lines. There's trendline traders that hate momentum. There's also people that use gamma levels and expected moves through options. There's Fibonacci's, there's Fibonacci retracements. There's a million ways up the mountain. And my way up the mountain is the Benjamin Graham way. I'm a value investor. That's what this show is all about. If you want to get really good at trend lines or other technical ways of trading, go for it. There's lots of people that are very, very successful in that. I try to use a little bit of technicals to help me help guide my decisions short term for my value investing decisions, generally speaking. There's no one clear better way up the mountain that's so much better than any other way. Another thing to bring up while we're talking about this subject is that when you're making a decision, it's very important to know what game are you playing. Are you playing your game? Are you playing your way of investing? Do you have a plan? Do you have this is how I do things? Do you have rules that you play by? Do you have some way that you orient yourself, that you guide yourself? If you try to use too many different strategies and combine them all together or go from one strategy to the next, that can really wreck people because they never get really great at one thing. But anyway, I just wanted to throw all of that in here. Moving on, the 10-year Treasury note yield did rise today. Sorry, here's the chart. I was thinking beforehand, just yesterday, I said I thought we were going to be sort of in this range. Instead, we popped to the upside out of this. However, just on a basic bear flag, we're still well below the 50% level of the flag pole. And so this still can function as a bear flag structure. I think yields are very high, much higher than they really should be, considering many things, including especially the valuation of the stock market. When you compare PE ratios of companies to this yield, to me, this is still very attractive, which is why TLT is still my favorite place to be, like I say, even though it dropped by 1% today. One thing kind of diverging from today's drop in TLT I want to note is the MOVE index. This tracks the volatility of bonds. Dropped today a pretty good amount to lows that we haven't seen since 2021, I guess. So what that's saying is that this move down, we're not expected to see the options market is not expecting to see another move equally down tomorrow, for example. Like it's saying that we're more likely to sort of settle in this area or maybe even reverse back to the upside. But we'll see what happens. I wanted to also bring up total 2, just, risk on, right? We have, what is this? A new all-time high? Yeah, a new all-time high in total 2. So that's all cryptocurrency minus Bitcoin. Yeah, we have a closing all-time high. So yeah, the markets are saying risk on, for better or for worse. Next up, with the 10-year Treasury note yield rising today, sometimes that can indicate, is there going to be inflation, more inflation? Well, the 10-year break-even inflation rate is day over day completely flat and not really flipping out any which way, but it's something to continue to monitor. Also, with the 10-year rising today, the 10-year minus 3 month is showing bear steepening. So this is when the value of bonds are going down. And my most famous video showed this chart where, it looked like it was compressing. We were getting tighter and tighter. Are we breaking out to the upside? Is the 10-year Treasury note yield going to continue to the upside? I think the MOVE index, again, is suggesting, no, it's not really. We're not seeing a runaway yield to the upside. If that was expected, the MOVE index would be rising here. And again, this is like a day-to-day thing, but yeah, I don't think it's not notable that we're at a low in the MOVE index we haven't seen for 3 or 4 years now. Last chart of the day for entertainment value only. I am impressed with myself to be able to. sold out of this fund MSOS at 551. That basically was the top. I mean, yeah, I mean, if I had timed it exactly perfectly, it got to $6. But I just wanted to point out, I've been talking about this Head and Shoulders pattern that broke to the downside, and I said it's like a child drawing a crayon. This is a child with a crayon drawing a Head and Shoulders top and saying, this is what happens when you re-break the neckline. And then today we tested the neckline. And so if the child continues to use his crayon to show us how a Head and Shoulders pattern works, this should be going back down. And if it does, I'm going to get back into this, actually, especially with all this cash that I just freed up from the Chinese equities. So that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.